Morning, Shane. Thanks very much for joining us again on Blue Notes on this, the morning of the third quarter trading update. It looks a solid result, broadly continuing recent trends. So how are you seeing the operating environment?
Well, you know, the operating environment is pretty steady. Clearly the economy is not performing to its full potential, but it's going pretty well. And there are some actual signs of improvement. And so our business is kind of ticking along pretty well. More importantly, the reshaping of our business has proceeded again really strongly in the quarter.
And indeed, when we look at the reshaping of the business, two things that do stand out a little bit: the ongoing reduction in risk-weighted assets in the institutional business. It's a smaller, sort of tighter bank. And then also the in part, regulatory-driven shift away from investors towards owner-occupiers in mortgage lending. Are they really significant trends?
Absolutely. In fact, it's more than just the regulatory pressure. I mean, we've said for some time as a strategy, we want to be the best bank for people who want to buy and own a home. And so we've been growing our business in owner-occupied home loans much faster than the market, and actually really reweighting our portfolio towards that, and we're really comfortable with that. And the way we're doing that is just, you know, really is focus and great product and distribution through our branch network. And then on the other side, we've also said we want to make sure that our institutional bank really focuses where it can win, which is about intermediating trade and capital flow. And so we've been reshaping that business, and the net result of that, it's smaller. And so, but it's better. And that actually again proceeded strongly in the quarter. And so those two things are really helping reposition ANZ, and primarily the reasons that we're driving good capital generation again in the quarter.
And when we look at the capital, since the interim result we've now had from the APRA regulator, some more detail about what unquestionably strong means. So are you happy with the shape of capital, with the options open to you?
Absolutely. It's great to have clarity from APRA after many years of continuing to strengthen capital as an industry. And I think for all intents and purposes, the moves on capital are largely behind us as an industry now. And so we've said the new level of what good looks like, which is the 10.5% CET1. Now, clearly unquestionably strong is more than just capital, but from a capital perspective, 10.5. And at ANZ, what we're showing already is that essentially we're there on a pro forma basis. That just means when we get the proceeds of the things we've already announced we've sold, we will be at 10.5. So we're in a really strong position, and clearly the ongoing restructuring of the business is designed to actually improve our capital generation even further.
And perhaps the other big change at the bank, which I suspect is much more visible internally, where it's very visible, is the new ways of working. You only announced that 3 months ago at the half-year result.
Yes.
How is that project to sort of change the way ANZ works going?
Well, when you're here, it's pretty profound, actually, I think, for people in the bank. It's 3 months in, we've still got quite a bit of work to do, but I'm really excited about the opportunity here. In fact, over the next couple of days, we've got a big demonstration downstairs of what it actually means for people, how to learn about this new way of working, the tribes and the different ways we're going to get things done. So it's proceeding really, really well, and there's a lot of excitement, I think, in the bank about the opportunity. That's not to say that when we get going with this early in the next calendar year, it's going to be a bit messy. You know, we're going to be changing things and people have to learn new ways. So it's going to take time for us to get into a new rhythm. But we're prepared for that, and I'm really pleased with the progress.
And I suppose the other, and this is not an ANZ issue particularly, but the other non-operating one is what we've seen with Commonwealth Bank, and again the focus on trust in banks. You've said quite a bit about, you know, how banks need to concentrate on this, and all banks are impacted when one particular bank or many banks are affected. But how is this turnaround going to happen? How do you make people trust banks?
Well, the first thing to note is that it's going to take some time. This is not something we can fix overnight. It's going to take a number of years, actually. That's how trust is re-earned. But the good news is actually the industry is totally united in this and about doing the right thing. You know, we've got our 6-point plan through the ABA, and we're all of the banks pushing really hard to get those things done as quickly as possible. But we also recognise that that in itself is not enough either. So that's a big transformation project. But as I said, my experience of working with our peers as an industry, people all want to put this behind us. They all want to do the right thing, and we're talking about making real and substantive change. And the first parts of that is actually already happening. And that is about the way that we compensate and incent our front line, our people in our branches, moving that much more heavily towards good customer outcomes. So that's in train as we speak, and many of the other changes are also happening.
To switch back then to the trading update, revenue is still, it's tough to come by. Margins are still under pressure. That tends to mean more focus on costs. Is that what you see?
Yeah. I mean, part of our reshaping was always a recognition that it may well be, in the shorter term, that some of our revenue growth was going to be lower. In fact, it might shrink a little bit, in which it did, very marginally in this quarter. But that's okay if, A, we manage our costs well, and costs were down another 1% in this quarter in absolute terms, which is, again, another terrific result on that. And we're really standing out from our peer group in terms of our ability to manage costs. But more importantly, when you combine that with a good outcome on credit costs because of the rebalancing, we're a lower risk bank, and the capital, our risk-adjusted returns are going up. So when you adjust for the shape of the bank and the risk that we're taking, our returns are going up. That's ultimately what our shareholders ask of us, and so it was a great quarter in that respect.
Indeed, you touch on the credit costs there. The credit environment appears to be still quite benign. How do you see that environment out there?
Yeah, absolutely it's benign. As I said, while the economy's kind of been muddling through for a period of time, there are starting to be some signs that things are actually pretty good. There's some weakness, I guess, in terms of business confidence, but when you actually look at the actual economic indicators, pretty good. And what that means is that corporates are doing okay. So there really hasn't been any major stress in any kind of industrial sectors. We've got the ones that are still the lag of the slowdown in the mining investment boom. That's still evident there, but even that seems to be coming to an end. So things look pretty good from a credit perspective.
Well, thanks again very much for speaking with Blue Notes.
Thank you.
Thanks, Shane.